President Trump's 25% car tariff has shaken markets, but how much economic damage will it do? This is Macro Matters, and we're talking tariffs. President Trump took aim at trading partners around the world this week with a 25% duty on all imported cars and car parts, and that has wiped billions of dollars off the shares of European and Asian car makers. The German big three, BMW, Mercedes and Volkswagen, between them account for nearly three-quarters of Europe's car exports to the US, so this alone could wipe out a lot of the recent optimism around a German recovery. Well, Holger Schmeiding is chief economist at Berenberg. Holger, how serious is this tariff for the German economy?
It is, of course, a serious threat to the German economy. After all, producing cars is one of the things that Germany tends to be pretty good at, or at least was very good at until recently. Having said that, many German car manufacturers actually are producing in Mexico. Some are producing in the US. So the impact may not be quite as big as you may suggest if you just look at how many cars with a German label are driving in the US. We calculate that these tariffs will reduce German growth by about 0.2 percentage points over the course of this year, which is significant for an economy which at the moment is barely growing at all.
How are you expecting the big car makers to react here? Are there other markets they might target, or will they, as you say, move more production to North America?
They will probably move a bit more production to North America, but we need to see how negotiations go. One of the problems at the moment is you don't quite know how to react. Trump says this is non-negotiable, but Trump may say something different after having spoken, for instance, to EU representatives in a little while. So I think at the moment, many companies will be holding back on investment decisions, both at home as well as in the US, Mexico and Canada. And that, of course, is overall negative. Once we get a clear sentiment, are these 25% car tariffs to stay? To what car parts do they also apply? Because exports of car parts for Germany are almost as important as exports of cars. Once we know that, we will likely see some businesses relocating production into the US. There will also be a few companies sort of moving the other way. But by and large, it will be more going into the US short term than vice versa. It will likely be a drag on German growth. Fortunately, this comes at a time when the German government is adding a domestic stimulus. So probably net between the two things, the German economy will probably still manage to shape up a little later this year.
As you say, Holger, this comes just after a deal to reform Germany's debt brake and increase borrowing, which sparked a wave of market optimism about Germany's recovery. But do tariffs now mean the picture might look a lot less positive this year?
It looks less positive for this year and next year, but it does not look negative. It really, the emphasis is on less, and it still remains positive. This is, after all, in German domestic policy, a sea change. And I would emphasize not just that this means more demand for defense products, more demand for infrastructure investment. It also, by enhancing the infrastructure, will over time raise the supply potential of the country, with the likely result of coalition negotiations being some incentives for people to work more, to work longer, tax incentives to do so. And with some deregulation drive, many German companies will get a benefit from that, stronger supply growth. So net, I would say, of these two things, Trump's trade wars, really bad. German changes, really good. Net, the result so far of the news this year is net positive.
How are you expecting European governments to react, Holger? Are they going to retaliate or attempt to strike a deal with the Trump administration?
Well, both. More precisely, Europe will probably initially wait and see. It will offer to negotiate. It will also wait a bit to hope for feedback from American companies complaining A, about uncertainty, and B, about some of the stuff that they import getting more expensive. Europe will also wait for US consumers saying, oh, we don't like things getting more expensive. So for now, what Europe will do is Europe will threaten serious retaliation, almost like for like. After all, many of the big US tech companies earn a significant share of their global revenues in the European market, and we would have ways to get at that. because if it comes to services, the US is selling more services to us than vice versa. But we will not initially wield the big stick. We will show the big stick and then negotiate and hope that by the end of the second quarter, we have a deal, hopefully a deal which will be bearable for us, not as good as it was all before Trump, and the deal which then Trump, if he's clever, as of course in a way he is, could sell as, of course, the best deal ever.
That was Holger Schmeiding of Berenberg. Don't forget, you can watch more videos on Reuters.com.